maybe this is the year that we see inbound international to the US exceed 2019 levels. As long as Trump doesn't mess it up, I think this will be the year of international travel to the US and be a big one. Disruptions coming, the World Cup. It's not going to be as big as a lot of US hosts hope it will be, but I think it is going to be the biggest travel event happening in short-term rentals that we've ever seen in the history of our industry.
Has Airbnb reached its peak? Is Booking.com winning the OTA battle? Why are the riches in the niches? And what are the biggest booking and data trends everyone needs to know in 2026? Jamie Lane from AirDNA is the special guest on the Host Planet podcast, and he'll be answering all these questions and more on today's show. Jamie, thank you for joining us on the Host Planet podcast. Let's get straight into it. Has Airbnb peaked?
It depends, but I'm going to say, peak revenue, absolutely not. This company's growing at 10% a year, and they're going to continue to grow at a pretty substantial rate. But when we look at their growth rate, and they were growing massively during COVID, and a lot of the markets, their key markets that they were growing in are maturing. US, most of Western Europe are very mature markets for Airbnb. So we absolutely are seeing the growth rate decline, and I don't see, unless some of these new things that they're launching, like services, experiences, hotels, really take off, that we're going to see in the 15 to 20% growth rates that we saw in years past.
Do you think any of the things that they are launching are going to take off? Are they going to move the needle much?
In their current iterations, I don't think so. I think they're so far a bit too limited in their ambitions in terms of what they want to launch. And services, experiences, like everything's got to be special, curated. Like, let me book a ticket to the Louvre. Like, let me do the things that people are actually booking in these markets. Like, what do I do in every city when I go to it? Like, when I'm in Europe, I get a walking tour. Like, the fact that I can't do like a normal walking tour and book it, like it's got to be this unique experience, like means that you're never going to see the massive growth, the mass adoption that we see. Like, if Airbnb did the same thing for their home rentals as they're doing for services and experiences, like I wouldn't be able to book half the rentals that I would today. Like, and yeah, like the private room in San Francisco isn't sexy, but why do people book through Airbnb? Because it's cheap, it's in the neighborhood they want to be. It's more mass market, and the fact that they go so sort of niche for some of these things, like, oh, we're going to launch hotels, but it's got to be really unique boutique hotels that we're going to allow on our platform. Like, let me book a Holiday Inn if a Holiday Inn wants to list on the platform.
Yeah, it's not always the billboard PR branded experience that people want or need. You know, right. There's a reason why we have mass market stuff, and sometimes it's just what people want. Okay, real talk now for all you hosts out there. You know that moment when your guest messages you again with, "Hey, what's the Wi-Fi code?" Or you're staring at 5 different calendars, wondering if you've accidentally double booked the cottage. Yes, we've all been there. That's why here at Host Planet, we recommend Hostfully. It's basically your rentals control center. It handles bookings across all the big platforms, syncs your calendars to ensure there are no double bookings, automates guest messages, and even creates these really slick digital guidebooks that stop all the repeat questions. Honestly, it just makes your life easier and keeps your guests happier, helping you achieve those all-important 5-star reviews. And here is a little bonus. If you're a Host Planet listener, you can get $500 off onboarding for Hostfully's property management software and 30% off digital guidebooks for life. Just hit the link in the show notes and use the codes PLANET500 for the PMS and HostPlanetGB for the guidebooks. And if you'd like a proper walkthrough, there's also a link to book a demo with Frank Bosey from Hostfully. He will show you how it all works. Less stress, more bookings, sorted with Hostfully. Let's look at the OTAs then generally. I mean, the big three, I mean, Airbnb, Booking.com, VRBO. Where do you see that they're all standing at the moment? How would you compare the three and their trajectories right now?
Yeah. And what's I think really interesting is they're all converging in many ways, but they're doing it through entirely different paths. So Airbnb started in the major cities in the US and in Western Europe with private and entire home listings. They have pushed really heavily into Europe and are dominating the sort of short-term rental space. And as we talked about, they're now moving into hotels. They're growing globally, and they are figuring out where growth could be and sort of moving into those sections. And Booking started with hotels and dominating boutique hotels in Europe. And now they're trying as quickly as they can to push into the states to make inroads on short-term rentals there, make inroads on even on hotels there to be a relevant player in the sort of biggest travel market in the world. They're growing, they're and growing at a fast rate, but they have a long way to go to have the hotel distribution that's Expedia and have the short-term rental distribution that Airbnb has. And then Expedia, Vrbo, like they've got a hold on the vacation rental markets in the states. They have a hold on the best distribution of hotels, and now they're trying to make inroads in Europe on the short-term rental side. But what's interesting is they're not trying to glow globally like Airbnb and Booking is on the short-term rental side. They like their core markets and they're sort of sticking to that. But ultimately, and we're moving to the OTAs where instead of homes or hotels, it's going to be stays, and that each of these OTAs is going to have a mix of the best hotel and short-term rental options for you.
Who do you feel like is winning out of the big three at the moment, and who should be most worried?
Yeah. I think Booking is winning right now, and they have dominated growth in the past, and I think it's 4 years in a row. They've had the strongest growth rates, uh, and they are making inroads in the U.S., though it's slow. Um, and Vrbo and took a massive hit when they sort of replatformed onto the Expedia platform. I do think they've got some of the best momentum right now. Like, and maybe that and all that work they did on replatforming and the ability to bring both Expedia inventory onto Vrbo and Vrbo inventory onto Expedia will pay inroads for them in 2026 and 2027. Like, I'm hopeful, but they've got a long ways to go to be able to get there. And then Airbnb, they are throwing spaghetti at the wall to try to get something to reaccelerate growth, whether it be hotels, experiences, but they cannot um, lose sight of their cash cow, which is short-term rentals. And if they are not continuing to innovate in their core product, like they're going to get left behind. And all the things that Booking and Vrbo are doing of building AI into the booking process. And I love and Vrbo sort of asks a question like on their booking pages, like, and does this property accept pets? Does it? And what is the Wi-Fi speed? Like all these things that you hunt on all these pages to be able to find info. Like, just give me a question box and allow me to ask these questions. Like, I think is actually pretty innovative, and is a good use of AI for booking a short term rental when every property is unique. So, and Airbnb, I think I'm the most worried that they're going to actually start getting behind because they're so focused on all these other verticals to be able to reaccelerate growth.
Your short term rental business is evolving fast, but how do you keep up with the latest regulation, tax changes, and industry trends? The answer is to attend the House Planet Roadshow, which is coming to a city near you in 2026. This is the UK's premier event for holiday let professionals, supported by the Short Term Accommodation Association, Price Labs, and the Women in Short Term Rentals community. This is your essential opportunity for learning, networking, and expert insight. Starting in Cornwall on the 5th of February, you'll spend a full day mastering compliance, optimizing your revenue strategies, and sharing lessons learned with your peers. After Cornwall, we'll be in Portsmouth on the 4th of March and London on the 23rd of April. That's the day after the Short Stay Summit. Later in the year, we'll be heading to Nottingham, Bath, Chester, and Edinburgh. So don't navigate the complex 2026 market alone. Learn from the leaders driving the industry forward and shape the short-term rental conversation in your market. Tickets are just £40 each and available now from our website. Head to houseplanet.club for further details. Now, one thing Airbnb has done to try and get a bit more revenue is to have the jumping commission, of course. And I was looking at one of your posts on LinkedIn. It said 445,000 US listings have been affected by the jumping commission from 3% to 15.5%. So how have hosts dealt with this increase, and what impact is it having on the US market?
Yeah. So this change in fee structure happened for all PMS connected hosts in the US. And Europe hosts were already on this. Like if you were PMS connected, you already had to do the host only fee structure. But I suspect a lot of this came from Airbnb does a ton of user research and conversion research on their app. And if you've been following along on social media, TikTok, Instagram over the past few years, like where has an Airbnb sort of come up the most? It's on people complaining about all the additional fees. So I've got cleaning fees, I've got a service fee, I've got a guest, all these fees. And ultimately, it's not the price that people care about or that we're complaining about, is that they felt like there was 5 different line items on when they went to check out that caused them ultimately not to convert. So back in April, they switched to a all-inclusive price. A lot of that was driven by legislation in the U.S. and where they sort of stopped sort of calling out the cleaning fee and any other additional fees, but they're still showing the and for hosts that had the split fee, they would show that service charge. And they could see, because there was 150,000 hosts that were on the host on the fee structure, I'm sure that those were guests didn't see that additional charge, that they were converting at a higher rate. So, all right, let's start pushing everyone to this all-inclusive host-only fee structure. And let's start with just the PMS connected ones, because those are going to be the professionals. Those are the ones we're going to be able to communicate most effectively with on why this change is happening. It's essentially the same charge, same difference between what the guest pays and what the host collects. We're just going to put it on your P&L instead of charging an extra to the guest. And like, I don't think it was the best rollout, and all the communication was a little fuzzy. I don't think most people actually understand why it was happening or how it was happening. A lot of people thought it was rolling out for everyone on December 1st because of how they sort of worded it. And there was a lot of pushback, and there was a lot of hosts that thought like, man, Airbnb's now charging me an additional 12%. Like, how am I going to be able to and be competitive now when essentially you just had to go in and increase your rates by 18%, and the amount the guest is paying is the same, the amount you're collecting is the same, and it's just I'm slightly moving around on the money. But then when we went in and looked at, after that change happened, how many people actually raised the rates by 18%? It was only like it wasn't a lot. It was only like 30%. And then a third increased it by like a certain amount, like offsetting the expenses a bit. But what people were worried about was that everyone else wasn't going to raise their rates. And that all of a sudden, and if you're thinking about as a professional property manager, like it's less like and what the ultimate rate is, it's how the rate is comparable to my competition. And if they're not going to raise the rate, then I can't raise the rate. I'm going to wait and see what everyone else does. And I think fortunately this all happened in October when it's like it's shoulder season. There's not a lot of bookings that are happening. Like I'll maybe raise my rate like 10% and then I'll see what my competitors do. And if everyone else raise the rates, then maybe I'll start pushing it up. So we are starting to see people and over time increase their rates to make it where your take home pay is the same. But it's more of a wait and see approach for most people.
With that 70% not putting their rates up, you imagine that their rentals then suddenly they're appearing cheaper. Were Airbnb getting more bookings at this point? I mean that's what they want, right? You know, they always want things to be a bit cheaper to get people to book more.
Yeah. And we have seen bookings relatively strong in the fourth quarter. Airbnb had warned investors that fourth quarter growth rate was going to be relatively weak, and compared to what we'd seen in the first half of the year. Like they were guiding people, it was going to be like 5 or 6%, when the rest of the year it's been about 8 or 9%. And so far, we've seen the and quarter trending about 7%. So, and can we and attribute some of that to and weaker prices, like maybe a little bit, but and ultimately Q4 isn't a big booking quarter, and Q1 is when it's sort of make or break for Airbnb for the entire year. Most of the bookings happen in Q1 for stays in Q2 and Q3. So I think they're going to learn a lot on what the changes in conversion are. I think it's a good natural experiment of like what happens when all of a sudden you discount properties by 15% because someone didn't change the rates higher. Like, do they start seeing more bookings or not? Like, I'm really looking forward to digging into the data and seeing and do we see and differences in booking activity. But so far, it's a bit too early to really see because of and we have like 1 month of data so far.
It's a brilliant data set for you guys who are digging deep into this stuff all the time. Another of your LinkedIn posts, then, which I spotted about niche listings, and
Yeah.
we hear this quite often. You know, the riches are in the niches in the STR world, and you've got some data to back this up. So, just tell us about the rentals which are set up to host bachelorette parties in the US. We call them hen parties here in the UK, and
Yeah.
why they earn more.
Yeah. So this was a fun analysis I sort of tasked my team with of like, we want to think about all the avatars that are sort of booking short-term rentals and like what are going to be some of the avatars that you could, and avatars I'm describing as like guest personas that go out and book. And so we could like different groups, and it could be families traveling to the beach. It could be and a girls trip specifically around a wedding, like a hen party or a bachelorette party. It could be friends wine weekend, like all these different personas. And what are there any listings out there specifically designing and amenitizing their properties for those avatars? And then if they do that, what is the additional earnings that they're getting compared to like an average listing, similar size, location in that same market? So what we found was that for properties like in Austin or Nashville or Scottsdale, where there's a lot of bachelorette parties going to, those properties that and paint their walls pink, add and makeup stations, do these things, and most of it isn't like significant expense to actually make your property like attractive to this group. Like, what is their difference in earnings? And like for these properties, we're seeing 20, 30% and more revenue coming in if they're making these properties attractive to those groups. And what's crazy too is like the changing booking patterns. Like I interviewed this one host that has gone all in on making her properties sort of bookable for these events. Her lead time is on average is more than 365 days in advance. Like, like this is, you think when someone's planning this type of party and like getting their friends together, they want to find the perfect property. They're booking it really far in advance because to get your wedding venue, it might be 2 years in advance. Like, and they're booking. So this is going to be part of a series that we look into different niches and how people are amenitizing, designing their properties, or even like setting up and the settings around the properties, making their property available. And then what is the changing in earnings that they can do? Like, not every market, not every property is going to be suitable for going after these niches, but there might be some niche in your market. There may be some investment strategy that you could come up with to really differentiate yourself and earn additional revenue there.
I love it. Yeah, I mean the lead time of 365 days. That's phenomenal. And yeah, it just boils down to knowing what your guests want and delivering it. And like you say, those things don't have to be expensive things. Painting the wall a certain color, having the makeup station. It reminds me actually. I was on an STR retreat not so long ago. And we were asked, a group of us, to come up with an idea for an STR related business. And a few of us said, if we were to set up a business tomorrow, a property management business, we'd want properties that are themed and aimed at a very, very specific niche audience. And the one we came up with, we called this make-believe company Team Stay. And the idea was that the rental would be near a stadium of a major sports team. I imagine an NFL team, let's say, in the US. I've just come back from Kansas City. So let's say the Kansas City Chiefs. And you have this rental and it's completely decked out. It's themed. It's, everything is NFL. Everything is Chiefs related, and Travis Kelce and Taylor Swift and all that kind of stuff. Maybe Taylor meets you at the rental and takes you to the game or something like that. But yeah, something like that, which is a genuine experience. We go back to what Airbnb was saying. But yeah, there's an idea for a business there for all of you out there listening.
And it actually goes in a theme that we see happening across the hotel sector. So I spent 10 years in hotels prior to coming into short-term rentals, and lifestyle boutique hotels are and what people are designing for and the type of brands that are being built. And if you think in a market, someone building a hotel that's sort of themed to attract a certain type of traveler and they've got 200 rooms, like there might be, if you think about the market that you're in, like, can I do 10, 15, 30 theme properties and there actually be enough to demand to support those type of listings? Absolutely. But it is understanding your market. It's understanding why people are going there, what they're wanting to do there, what are the types of properties that they would book, and could you then make that property and directly and designed to go after that group. And then if you do it, like, and the outsized earnings that you get from it, like, and I love people that are thinking really hard about those type of design and guest groups.
100%, yeah. I mean, you can see it working with something like, I don't know, the Masters at Augusta, for example. If you've got a property around there which is set up for people who are visiting, they're attending that tournament, they probably want to play golf as well. If everything's set up around that theme, everybody gets a green jacket on arrival. That I'd love a green jacket, by the way. But that would really, really work. So yeah. Well, what brilliant ideas we're giving to STR professionals here. Right, a little bit more generally then. So 2026, what are the big booking and demand trends that you're seeing? How can you help hosts and property managers prepare for the year ahead?
Yeah. Maybe I'll start with just what's happening on the supply side, because this is something we've been analyzing a lot because I think it's going to drive a lot of the booking trends. Of you look at most of Europe, we're actually seeing supply falling in many countries because of new regulation being introduced. So you look at Spain, Italy, Croatia, some of these sort of key short-term rental markets. Like there are fewer listings today than there were last year. Uh, what does that mean in terms of booking trends? And it's going to be like what we saw happen during COVID. Of the biggest driver of the increased occupancies that we saw in many markets wasn't because there was more people traveling. It's just because there was fewer listings available to be booked, which pushed occupancies to the record highs that we saw. So I'm actually pretty bullish for a lot of markets across the world that we're going to see rising occupancies because there's fewer listings to be booked, and that's concentrating booking activity into fewer number of properties, which is for existing operators right there. If you're able to navigate through the regulation, it's going to be good for occupancy, and that's going to be good for your ability to increase rates and maybe offset some of the rising expenses that you're seeing. In the U.S., I'm not as bullish. I actually think that supply is going to be re-accelerating some as home values have been coming down, interest rates have been coming down, and it's actually becoming a much more investor-friendly market where it hasn't been. Like past 2 years have been terrible times to invest in short-term rentals. Like finding cash flowing investments has been hasn't been impossible, but it's been much more difficult than it has been in years past. And now we're starting to see the tide change. We're going to see more supply being added in. And we're at a time where the economy's on a bit of like shaky footing. We're seeing GDP growth decelerate. We're not seeing it fall. We're not in a recession, but we are seeing consumer confidence sort of pull back. And for the vast majority of consumers, those in the sort of bottom 80% of the income spectrum, we're seeing them pull back on spending. And that is impacting a lot of travel. We're seeing hotel demand falling right now. We're seeing occupancies drop for most budget economy mid-scale short-term rentals, which is putting some pressure on occupancy there, and we expect that to continue into the year. And where we see things looking really good is for those upscale and luxury properties. So those are typically the ones that have done a great job of amenitizing, a great job at design. As where short-term rentals or hotels are different, like in hotels, a luxury property is something, it's one where there's like 15 people in the lobby that are going to take care of every need you might have, right? Then you get to the room, like room at a luxury hotel and a mid-scale hotel don't look too different, right? But for a short-term rental, like what's going to cause you to get that out in really high rate? It's not that there's a butler in the property. I haven't been to many short-term rentals that have on-site butlers. Maybe there's some in the UK. But it's those properties that have really great amenities, very well designed. They've got a pool. Maybe they've got a great view. They're properties that are going above and beyond and to make it be a great stay. They're the ones that are consistently cleaned. They've got great review scores. Those are the properties people are willing and able to pay more for. And those on the higher end of the income spectrum are continue to, and their incomes are outpacing inflation. The stock market's at record high. Their home is worth more than ever. They feel rich. They are rich. And they're traveling more than ever. And what happens when we go into recessions is like everyone sort of pulls back, but it's like people still take their trips. They maybe go for a little bit shorter. They maybe, instead of a luxury home, stay in a mid-scale home. And that's not what we're seeing right now. Like we're just seeing those on the lower end of the income spectrum pull back. and those on the upper end spend more. So it's this weird dichotomy of the well off are feeling better, and those that aren't as well off are feeling worse. And we're seeing the economy move in that sort of direction.
The rich get richer, eh?
Yeah.
What does the data tell us about guest behavior right now?
Yeah. Guest behavior is moving towards like looking across the OTAs. So every OTA has added badges in the past year or two. Like, and you go to Airbnb and you see these and top badges, top 1%, top 5%, top 10%. We've got guest favorites now in addition to super hosts. We've got Vrbo launching their top properties. So guest loved or Premier Host has now gone to a property level as opposed to a host level, which still doesn't make sense to me. How can you be a Premier Host at a listing level? So guests are now taking that signal of, oh, I should only be booking these guest favorites. I should only be booking these top properties. And it's causing this dichotomy within the listings of those that are sort of optimized to get these top badges are doing better. We're still seeing guests book the gamut of different location types. Like if we would have talked 4 years ago and you'd be like, Jamie, everyone's going to these rural areas. They're going to the mountains. They're not traveling to the cities. And would you expect that to change? I would have said, absolutely, James. Like people are start traveling to the cities again. They're going to stop going to the countryside. And we haven't seen that. Like um, um, international travel to the States still hasn't come back. Europeans are not traveling to the States. We've now seen Canadians pull back on travel to the States because of sort of perceived and maybe how much they like our current administration or not, uh, to put it nicely.
Very diplomatic.
Uh, and that has really impacted sort of performance in a lot of markets. So if you're in the Adirondacks, right on the Canadian border, and we're used to a whole bunch of Canadians coming down to the summer, like you didn't see that. Now we're heading into winter, and Canadians typically head down to Florida, head down to Southern California, go to Hawaii. Like we're not going to see that this year, and that's a big portion of overall demand that is essentially, and it's not that they're not making trips. Like they're going to be going to the Caribbean, they're going to be going to the Azores, they're going to be finding other great warm destinations to go to. It's just not going to be Southern California or South Florida this year.
It's interesting. Yeah, I was having a conversation actually in the gym yesterday about the States because I've just come back from Kansas City. And one thing I found, and it's something that a lot of people from the UK have said to me about the States, is that it is really, really expensive right now. And part of that is to do with the currency. The pound is not as strong as it was. I can remember going not so long ago, and it was £2 to a dollar. And I think I got a pair of Levi's for £14, which felt like an amazing deal. And now it felt like everything was expensive. I was going for a coffee and I think it was a coffee and a bagel or something. It was over $20. So it felt really expensive. And I know a lot of people have said this about Las Vegas as well. So it seems like the hotel prices have just gone crazy there and not as many people are going. So yeah, I think, you throw in, like you say, concerns about the administration, the cost, it feels like a really expensive place to travel to at the moment, the States.
And then the opposite is true too. As an American, the Europe feels like it's on sale. Like going to Europe, it's like, man, like 10, 20 years ago, things felt so expensive. Now it feels, and not cheap to go to London, but like, a beer doesn't seem like it costs as much now. And you see like travel from the States to Europe is like 45% above pre-pandemic levels. And like you look at the demand trends across the UK, France, Germany, Italy, Spain, like Americans are driving more demand than ever. Like the top inbound country is Americans. Like even in this year where you expected some of that perceived like, oh, like do I want to go to Spain and get and have people squirt and do squirt guns at me because I'm part of the over tourism problem? Like people didn't pull back. Like people are traveling, Americans are traveling to Europe more than ever. And like it's not good. I mean, it's great for European short-term rental performance. I'm very bullish actually on European demand going forward. It's not great for U.S. short-term rentals because you don't see the Europeans coming, and you have the Americans going overseas for their trip. So their U.S. is sort of getting the double whammy of a lack of travel.
We're delighted to take all the US guests. We're delighted to take that strong dollar. But it used to be the opposite for us. We'd go to the States and
Yeah.
we'd spend a lot of time in your malls and all your high streets because buying clothes over there was really cheap. Now it isn't. But yeah, these things that they turn around eventually, don't they? So I'm sure we'll see lots of travel to the States in the future. We did touch a bit on regulation before, so I'm going to skip through to direct bookings, which continue to grow. From your vantage point, what role do you think direct channels will play over the next few years, especially when we factor in Airbnb fee changes?
Yeah. Uh, I think we would all like more direct bookings. Um, the problem is that the OTAs are getting better at driving demand to their properties. And looking at and our data, like we actually see the direct bookings are still going up, but their share of overall bookings is actually coming down. Um, which isn't a good like with all this sort of push to book direct, like OTAs are still taking a greater and greater share of the pie of overall bookings. Um, we see Airbnb growing, we see Booking growing, we see Vrbo giving a little bit back, but overall, like the OTAs are spending more and more money. Um, I'm very worried about what AI is going to do to direct bookings. And if I go and search uh, and on Google, and there's a good chance that a direct booking site, it might not be the number one, but it might be three, four, five in terms that comes up. But now if I do it through in ChatGPT or Gemini, like it might only give me one or two choices. And the OTAs booking Vrbo have partnerships with ChatGPT that are bringing up that carousel in app of like, oh, here's three great short-term rentals to book through booking.com. Like I might not even see an option now for a direct booking site. So that really worries me in terms of their ability, our guests' ability to find these direct booking sites. If they and the OTA, if uh, direct booking sites do not sort of talk well with the OTAs, make it easily bookable through, like that could be a problem. So it's something we're watching in terms of, and are the models going to be able to figure out how to bring direct booking sites forward? And if they can't do it with hotels, if they can't do it with Marriott.com and Hilton.com, like the chance for my site to get picked up is very low. But I do love like and my ability to code a direct booking website now, and with and how Gemini can give me all the prompts that can go and make my site look better. More ability to sort of do it on my own, and more ability for and all the great sort of booking site providers out there to get better and make my property more optimized to get show up on traditional SEO and is definitely accelerating.
Yeah, you can create a great website. It's the old problem, isn't it? You can create a great website. You've got to get people to it. So that's going to continue to be the challenge. So for the next year ahead, then for 2026, what are the predictions that you can share about the STR landscape? Any surprises or disruptions coming, do you think?
Yeah, I think on the disruptions coming, we haven't talked about it, but the World Cup is going. I think it's going. It's not going to be as big as a lot of U.S. hosts hope it will be, but I think it is going to be the biggest travel event happening in short-term rentals that we've ever seen in the history of our industry. Um, there's going to be more people traveling in short-term rentals around this event than ever before. Uh, I think what's going to happen though is we're going to see so much new supply added. Like, and there are so many people that are going to be first time hosts specifically for this event. And any sort of thoughts you had or that host had of like, oh, I typically charge $100 a night. I'm going to get 500 or $1,000 a night because of this event. Like, I think there's a lot of people hoping, and and you're going to keep hoping, and so that's going to be a major disruption. There's going to be all these different routes that people are going to take. Of yeah, you're going to go down to Miami to watch Brazil, but you're also going to stop in Orlando. You're also maybe going to go to New York. People are going to take these big trips. And maybe this is the year that we see inbound international to the US exceed 2019 levels. So as long as Trump doesn't mess it up, I think this will be the year of international travel to the U.S. and be a big one. But maybe not the premium that people would have expected because of all the new supply that's going to come in.
I think that makes a lot of sense. And yeah, I mean, there's 48 teams in this World Cup. It's the biggest World Cup ever. Previously, it was 32 teams. Regular listeners will know that I worked on the Qatar 2022 World Cup. And it's interesting what you say there about not getting the boom that you might expect. Because I remember we had property owners in Qatar who basically waited and wanted to charge a premium rate because they expected this massive, massive influx of fans, and they were left with empty properties at the end of the day because it didn't quite materialize. So very interesting what you say there, and of course you've got your eyes right on the data, so you'll see exactly what's going on. Okay then, Jamie, we've got a few questions to finish then, which we ask everybody. Your favorite brand in the STR industry, apart from AirDNA, of course.
My favorite brand. Uh, this is a cop out, but I'll explain why. The Airbnb brand, like for the space, like, and I'll compare it to the Vrbo and Booking brands. They're the only brand that I see doing sort of industry marketing of presenting why a short-term rental is better than a hotel, why you should, like, because I see it not only like that type of advertising not only helps them, it helps direct bookers, it helps Vrbo and Booking. Like, it is presenting our product as short-term rentals in a new light for guests that I think raises or expands the pie rather than just trying to take a greater share of the overall pie. So like, I love that type of brand marketing. And it's like, yes, it presents their brand, but I think it presents the industry brand in a different light.
Yeah, completely agree. It helps, of course, when most people in the world refer to a short-term rental as an Airbnb. But
Well,
yes,
there's a reason for that, right?
yes,
They put a lot of effort into that brand. Yeah.
yeah, absolutely. Yeah, well said. Individual shout out then. Who in the STR industry would you like to give a shout out to, and why?
A shout out. I'll give a shout out to my co-host on Good Morning Hospitality, Brandy. She just started a new role at Stayterra. Stayterra and private equity roll up on growing sort of new brand, and she's coming in there in the operations role. And a shout out to all the operators out there. Of you guys are the ones like actually getting these properties turned over, dealing with guests. Like those are the hardest roles in the industry. Working in the tech space, like, and we're working with ones and zeros. We don't actually have to clean any toilets. Like, it's an easy one. Yeah.
Shout out to Brandy and all the operators and everybody who's cleaned a toilet, myself included. Finally, then, if you could give hosts one data-backed strategy to improve occupancy in rates in 2026, what would it be?
It would be, and I'm going to throw in a plug for AirDNA here. Go into AirDNA, go to your market, filter to your bedrooms, key amenities, like go to then the top listings in your market. And I want you to go through each of those top 10 listings and understand why are guests booking those listings. And like, it's going to take you about an hour because you're going to have to click through each of those. You're going to look through the photos, but it's going to be very clear for your market, like what is driving guests to these properties. And then you look at your list, like look at what the commonalities are across those top 10 properties. And that's what you need to do to drive more bookings to your property.
Fantastic advice, and we will put a link to AirDNA in the show notes so people can go through and do that bit of research and work out what the competition are doing to deliver success. Jamie, it's been a real pleasure. Thank you for joining us on the Host Planet podcast.
Awesome. Thanks, James.
Great to chat to Jamie Lane there from AirDNA. Make sure you check out your competitors to get ahead in 2026. That's just about it for today's episode. Remember, this podcast is brought to you in collaboration with Hostfully, which is trusted by short-term rental professionals across the globe. As a Host Planet listener, you get 2 exclusive offers. $500 off onboarding for Hostfully's property management software. Just use the code PLANET500 and 30% off digital guidebooks for life. Use the code HousePlanetGB. To grab these deals, click the link in the show notes or head to housefully.com. For more free education, tips and trends from the STR industry, visit houseplanet.club, where you can sign up for our newsletter, listen to our podcasts, and download a suite of ebooks for hosts and property managers. That's it for today's episode. Until next time, happy hosting.